Good morning, Michael Feller here on Deals TV. It's Monday the 12th of October and in news today, a few more candidates for Australia's ever-increasing list of IPO candidates. We have Independent Liquor and Witchery, the company that was once owned by Peter Lew, son of Solomon, on the cards for possible listings. Witchery is currently owned by private equity interests, but on that Lew connection, it's interesting to note as well that Solomon Lew could make a bid for Breville's. It's believed Solomon Lew's company Premier Investments, which also bought Just Group, owns 25% of Breville, which is known for its kettles and other things. Breville is otherwise being bid for by GUD Holdings. They're bidding $2.20 per share, or a total of $322 million approximately, and effectively they have about 40% of share right now. In other initial public offers and that type of thing overseas, Birdseye Foods, the frozen foods company, is contemplating an initial public offer that could be to raise US $350 million. Currently they're owned by Vestar Capital Partners, another private equity company, which, like private equity companies here in Australia, TPG and Myer and so forth, are in the process of taking advantage of the recent gains in share markets to exit companies that they bought in the last few years. One company that's not owned by private equity and is contemplating a listing, though, is Al Wafir Air. Al Wafir Air is an interesting company. It's effectively a charter airline which ferries people around the Muslim world to Hajj, to Mecca that is. They're owned by the Saudi Bin Laden Group, among other investors, and they could list in the next year or so. And speaking of Middle Eastern companies, a company called Gulf Al Guhir, which is behind Arabian flexible packaging, could buy Amcor, it's rumoured, or at least buy a chunk of Amcor. Previously, they've said they're interested in assets owned by Amcor and packaging, the remaining packaging assets that belong to Rio Tinto's Alcan division. But there's been some interesting options trading going on, we've been told, in Amcor. So perhaps look out for some good news there in the next week or so. In other rumours, it's thought that Babcock and Brown Infrastructure's recapitalisation deal could be under threat. Hybrid note holders are apparently they're ruining the decision not to go with the Royal Bank of Scotland deal. Elsewhere, there's talk that Transurban could raise capital sometime soon, and that Servcorp could raise $80 million, according to the Australian Financial Review. That $80 million capital raising would be at $4 per share. And finally, there's news overseas that Citigroup has sold its energy trading business to Occidental Petroleum. That business, Phibro, used to be known as Phillips Brothers and is famous for its $100 million man, Andrew Hall, is paid $100 million a year, but interestingly, he once lost $100 million in a day when he was playing the oil price on the day that the United States first invaded Iraq in 1991, the first Gulf War. So that's a bit of trivia there. Another bit of trivia about Phillips Brothers is that it used to own Solomon Brothers, which later, of course, became Solomon Smith Barney, which now, of course, is owned by Morgan Stanley. Morgan Stanley Smith Barney is now the trading name for the share broking division of that conglomerate. But either way, this deal means Citigroup is finally letting go of that past history, and Andrew Hall will be able to be paid exceptional amounts of money without getting pressured by the US government. And also, speaking of highly paid banks and so forth, the private banking division of ING may have received another bidder. ANZ was originally thought to be interested in that division, though it's not believed to be interested anymore. However, OCBC, the Overseas Chinese Banking Corporation, is believed to be interested. They're going head-to-head with HSBC, it's thought, as well as another Singaporean bank, DBS. Anyway, that's all we've got time for this morning. I'll see you tomorrow.